afternoon from Los Angeles and happy Friday. It's Alyssa Corman, Ken Shreve here with a look at the stock market today. And on today's lineup, we're going to be taking a look at Intel, NetEase, and TransDigm. But first, let's take a look at how the major indexes did today. We have the NASDAQ leading the gains up about 0.6%. The S&P 500 finished up about 0.5%, and the Dow finished up about 0.1%. But really, the story also is the strength in small caps that we saw today.
Yeah, no doubt. I mean, it was another day of tech buying. We had a better than expected jobs report before the open. Looks like the economy created, I think it was 196,000 jobs. That was nicely above the consensus estimate of 170,000. So
and well above what we saw last month.
Yeah, and you know, the revisions to January and February were not all that great, but the market is just focusing on a good jobs number for March, and so we saw a good wave of buying in the NASDAQ. We're going to take a look at a daily chart of the NASDAQ here, and you can see it's just been working its way higher since the end of last year, and it's really getting close to that all-time high. I think it's right around 81.33, I think is the all-time high that we're looking at here. And you mentioned the Russell 2000. We don't have a chart of the Russell 2000, but it outperformed today up about 0.9%, reclaimed its 200-day moving average, which has been a resistance level, so that's compelling. And this index could be poised for a breakout over 1600. So you know, we're still in a confirmed uptrend, and a good way to end the week for sure.
Yeah, and one way to play small caps is with ETFs. So we have the IWM ETF. So go check that out if you are interested. We did see small caps really lagging during the correction, but now coming back to life, it looks like.
Yeah, I mean, when you look at the Russell 2000 against the Dow, S&P 500, and NASDAQ, it has been a laggard index, but it definitely showed signs of life again today, up 0.9% above the 200-day moving average, and we'll see if it can try for a breakout over 1600. That would make the bulls happy for sure.
All right, well, let's take a look at some stocks. We have Intel. It closed the day down about 0.6%, but resilient amid a downgrade here from Wells Fargo, downgrading the chip maker to market perform, although it did raise its price target to 60. Intel finishing the day about 55.60, so a little under the $56 mark here, and it is back in buy range after struggling a little bit to hold above a buy point.
Yeah, I mean, a resilient performance for Intel. It's always interesting to see analysts come out with a negative comment, but they raise the price target a little bit. So Intel looks like it closed around 55.5 thereabouts. Yeah, the chip stocks have been in the news. We've been talking a lot about the semiconductor strength. Even with the Intel downgrade, the semiconductor index still showed a nice gain today. So underneath the surface in the chip space, there were a lot of nice movers, but Intel downgrade really didn't affect the stock too much. It closed well off lows with just a modest decline.
That's right, and I think one of the big sectors that a lot of people have been talking about is software, but the chip group is looking strong here as well when you're looking at year-to-date sector performance, and now we're starting to see some of these names coming back to life, including Intel.
Yeah, there was a big sell-off in software stocks yesterday, and that clearly has been the main pocket of strength in the technology sector. Not much of a bounce back in a lot of leading software names today, but again, chip stocks outperformed again, and again, fairly subtle reaction by Intel to a downgrade. So chips still look pretty good here.
All right, well, let's take a look at the chart for NetEase, which finished the day up about 4% in heavy volume, and this week NetEase gained some 16%. So a really strong week for the stock as it's now breaking out of a sort of a bottoming base here, would you say?
Yeah, it's this is kind of interesting because it's still far off its high, but it did actually form a pretty good-looking base, and a big percentage gain this week, helped by a big move in the Shanghai Composite. Ended the week with a 5% gain. So China stocks have been seeing renewed buying interest, and yeah, you can see the breakout for NetEase. The buy point was 258.82. It broke out earlier this week and has really extended gains smartly. So I think it ended the session about 7 or 8% past the buy point, so it's past that 5% buy zone. But you know, a strong mover like this, if it's a really strong breakout, maybe we see some kind of sideways action from here, and sometimes you can get an alternate entry. So not buyable now, probably just extended from the buy point, but watch out for an alternate entry.
Yeah, and it looks like the strong performance as of late is also piggybacking off of a turnaround in the fundamentals here. Quite a streak of earnings declines, but in the last quarter reported a 22% gain, so some fundamental momentum here. Yeah,
definitely. The company has always had good revenue growth. NetEase has, and like you said, after a period of earnings declines in the fourth quarter, earnings turned around. So it does appear to be a good fundamental story at NetEase.
That's right. So something to keep in mind as well, looking at the chart action as well as the fundamentals together.
Yep.
And taking a look at TransDigm, a leaderboard stock, finished the day about flat, but the real lesson here is that it's now within that 20 to 25% profit-taking zone after a breakout it was able to extend its gains after earnings here, and it's now in that profit zone. Yeah,
this has been a big winner on leaderboard, and I wrote in the big picture earlier this week that we've rallied really nicely since the January 4th follow-through day for the S&P 500. So a lot of growth investors that started putting money to work in January and were buying those breakouts, a lot of software names, names like TransDigm Group. You know, some people have gains of 20% or 25% in a stock. So that's a key sell rule that we've kind of been pounding the table on recently, that if you've got a 20% gain, we found that, you know, years and years of research shows that a stock typically starts to consolidate and take a breather after rising 20 to 25% past the buy point. So TransDigm is a profit-taking candidate. If you've got conviction in the stock, it's probably okay to wait for a test of the 50-day moving average. That's down around 430. But again, you know, a 20% gain from the buy point, nothing wrong with taking partial or even full profits and you know, raising some cash and maybe finding something else to buy.
Exactly. As you said, that profit-taking zone doesn't necessarily mean you have to, you know, sell your entire position if you do believe that this is a big winner, but there's nothing wrong with selling into strength and getting a little bit off the table.
Yeah, and if you have, depending on your understanding of the company and growth prospects and fundamentals, I mean, there are you know, conviction stocks, and there are stocks that you like but you don't love.
Exactly. So, maybe put your money to work somewhere else.
Yeah, so I think with conviction holdings, stocks that you feel have a real good chance of being a big market winner, you might be a little hesitant to sell all of a position at a 20% gain. You might want to give it a little more room to work. But
and market conditions also a factor.
Absolutely true.
Okay, everyone, thank you so much for joining us today. Be sure you head to investors.com for all the latest, including our stories that are in the IBD Weekly, now trickling out on the web today and over the weekend. So a lot of can't miss columns for you there. And you can also follow our content across social media, whether that's on YouTube, Facebook, Instagram, or Twitter. So make sure you are following and subscribing so you can stay up to date with all things IBD. Thanks so much for joining us, and we hope you have a great weekend.